Hey, what's going on, everyone? Matthew from therighttrader.com back again with another stock analysis video. Today we're going to be talking about Tesla stock and seeing where it might be heading in 2020 as we head towards the end of the year. We're going to be taking a look at the chart, and I'll be talking about the technical analysis, where I can see it maybe stabilizing, how low we might go potentially, considering all the economic conditions right now and the fear in the market. So we're currently at a market cap of just under $90 billion. Tesla obviously reached some very high numbers this year, with reaching an all-time high of $968.99. So that is obviously the all-time high it put in. Elon Musk and has long been saying that Tesla, he even mentioned in the past, I remember saying that Tesla is and will be, I guess, a $1 trillion company, which, that might very well be the case. But as of right now, you have to think, okay, what's a reasonable market cap, but also what's happening with the company right now. And that's what we're going to see. If we look at some of the news pieces, I actually like what I'm seeing considering everything that's going on right now. So Tesla, the company, and Elon Musk, the CEO himself, have been pretty active with everything that's been going on. They haven't really been, abandoning operations or doing anything ignorant, so to say. For the most part, they've been pretty on top of everything, which is pretty impressive to see, actually. We've seen a lot of companies make some pretty bad decisions throughout all of this, but actually Tesla seems to be doing some pretty big advances. So they actually saw very good quarterly deliveries despite everything, as we can see here. And it was some pretty big numbers, over 88,000 deliveries. So very, very impressive for that first quarter. Now, we can also see that it cut contractors from the California and Nevada factories. This will obviously reduce costs in this period. So that is also something that's going to help Tesla financially during this time. And now that, they have made all those deliveries, that's one less thing to worry about as well, that, investors won't be pressuring them as much for the next few months, probably. If we look at the chart, just on a very simple manner, we can see that we have pulled back significantly, obviously, from our $968 all-time high, right? We're almost at half of where we were before. So at that all-time high. Now, if we look at the chart, we can see a couple things going on. If I zoom out, what we're going to see here is this green circle is the run-up we had, right? And now we're coming back down from that run-up, which is expected because, to be honest, that run-up was just not sustainable no matter what was going to happen, right? We're way above the upper Bollinger Band, and this is on the weekly time frame, which is an extremely rare thing to happen. And if we go ahead and zoom out, right, you're going to see just how overbought we were here on this peak. We were all the way at 95 almost on the RSI, which is extremely, extremely overbought. Now we're seeing the MACD move red, move below the orange line, so it is downtrending, and of course we have that downtrend as well on the RSI. Now you could even say that we somewhat broke out of it, depending on how you draw it, if you take it like this. But the idea is the RSI is falling, right? And more importantly, we want to take a look at the price. What exactly is going on? Where are those support levels? How fall might we go? How low might we fall? So if we take a look here, we found support at around $390. That is our bigger support level that we need to be paying attention to right now. It was strong previous resistance, and as you know, resistance turns into support once you get above that level. So $390 is very key, and we actually bounced off that 50-day moving average, which was around $358. So $350 to $390 is a very strong support level, and one that in the shorter term I don't see us dropping below, at least just yet. In fact, the most likely scenario, all things considered, and I'll go ahead and match the color here to the Bollinger Bands, is that the Bollinger Bands come and tighten up around the price to cause consolidation right around where we're at now, right? So give or take somewhere between $460 and $520, right? That's probably going to be the consolidation area that we're going to see if these Bollinger Bands come and tighten up towards the price to create that consolidation, which is, like I said, a very likely scenario. Now, let me just go ahead and clean up the chart, talk a little bit more about what we might see if we end up falling further, right? Where can we expect some bounces? So if we move below $390, and I should say that I don't hold any Tesla stock right now. I'm not currently a buyer, even if we consolidate around here. However, if we start falling below 390 or even $350, I'll more and more consider entering a position as the price just becomes more attractive at that point for me to enter at what I would consider to be a good deal, right? Now, we have this primary uptrend line, which has not been broken yet. So that is still our current uptrend line. And that would probably lead to, bounces and not dropping below really $350 for the most part, and even maybe $390. So this should be a pretty strong uptrend line that could really avoid us falling that much lower than what we've already fell, right? However, we do have a secondary uptrend line, which we could visit if we're going to fall lower and if the situation worsens, if the economy worsens. Tesla isn't a company that is recession proof by any means, at least in my opinion. So it is not going to be able to avoid necessarily, financial hardship, so to say, right? And investors being just overall scared, selling out of their positions. So if we are going to fall lower, that would lead to probably a fall below this primary uptrend line, below $350. And then we would be looking at two main support levels. We're going to be looking at a pretty interesting area right around $250 to $260. This area just had a lot of support back here, so that would be an area that we would probably bounce off of. But don't take that with too much importance, because usually, right, if we're gonna fall lower, let me just sketch this out real quick. If we're gonna fall lower, we are probably gonna get some bounces here off this trend line, then fall lower, and then we might bounce a little bit off this $250 area. But realistically, if we're that low, usually what happens is we end up testing that uptrend line, and then we can actually have the confidence to estimate that the price will move higher again once we reach the uptrend line. So although $250 is support and we might bounce on it a little bit, it's very uncommon that that would be the actual bounce area, since it's just better, and most of the time we get that drop to the uptrend line to clear out everything, so there's no further concerns of a bigger drop, and then we end up bouncing higher. So overall, I actually think Tesla will weather this storm relatively good, all things considered, right? So just to give a recap, I think moving below $390 is possible, but we also have a fair chance at consolidating and stabilizing above that. By all means, that is pretty likely, and we've seen in the past, right? Tesla likes to enter these consolidation zones. For the longest time, it was between $180 and $390. So we have a lot of supports at that $390 mark, and that's why we have every chance that we can stay above it. And even if we fall lower, we're not looking at a drop where we're going to go sinking below $100 and Tesla will just disappear. What's much more likely is that we find some support at the worst at this previous uptrend line, and then we can move back above $250. So really, based on what I'm seeing here, at the very worst, we would be reaching sort of that $220 area. And that's, like I said, if we really end up getting hit hard. Now, also, keep in mind, the more time that passes by, the more the price should start stabilizing around this $480 if it hasn't dropped yet. And then if we fall after that, it's going to be more likely for us to get a bounce off that $250 area, even avoiding a bigger fall, right? So it depends also on when we could sink lower. If it's going to be, in the next week or two that we fall more, then yes, we could get a stronger drop. If we end up being able to stabilize and then we get a drop in a couple months, it probably won't be as bad. So either way, I think Tesla is in a bit of a winning position here. And, if you like the company, I'd say that really anytime here, you're still getting it at a huge discount, because I can see if things get back to normal, Tesla getting pretty quickly back to that $900+ area, and over $1,000 in the years to come. So that's not financial advice. That's just my personal opinion. Please make sure to trade it and invest at your own risk. But with that being said, I did want to mention that I think, even though I'm not buying at $480, I think that overall this drop already provides a pretty nice, decent value entry. And the lower we go, the more it starts to become very attractive of a deal if things, will recover, which hopefully they do. Obviously, if everything goes down the drain, well, that's a whole different story in itself. But based on what we're seeing, Tesla is looking like a very nice value opportunity at the current levels, and the lower the better. So I think that this is actually a little bit of a blessing here with the Tesla chart. And I think a lot of people felt a little bit bad that they missed out on the whole run up. And in situations like that, you have to stay level headed, really realize that the price usually does come back to a good entry point. And I think that's what we're seeing right now. So overall, I think Tesla is a decent buy. Once again, not financial advice, but the company is proving itself to be able to hold up pretty well during this storm where many people might have thought that things would go really bad for Tesla. I think that we're going to see it actually hold up better than most people think. Not that it won't fall necessarily, but that it'll just hold up better than most people would expect. With that being said, thank you so much for watching. Make sure to follow me on Twitter. I post a lot of market updates there, so definitely check that out. Link in the description. And also check out my technical analysis master course on Udemy. We've gotten great reviews, 4.4 stars, over 42 students, and it's less than $20. You can try it risk-free with our 30-day money-back guarantee, so you've literally got nothing to lose by giving it a try. Let me know if you want me to cover any other stocks or industries during this downtrend. I'll definitely take a look and see what I can cover and review. With that being said, thanks for watching, and I'll see you next time.